Have you ever thought about investing or how to invest in real estate? Do you have extra cash that you think that could be doing more work for you, or are you tired of the frustrations of your typical retirement account, bank CDs and stuff like that and want a different kind of return, or do you just want to do something more meaningful with your money? All right. Welcome. My name is Robert LaFrance. I'm a real estate professional and certified knowledge broker. I have to tell you, I'm a licensed realtor as well with eXp Realty. But what we're going to be talking about here is how to invest in real estate for beginners. A little bit about myself. Veteran Navy diver. I have a few rental properties. I've been to a ton of workshops, been a ton of my real estate association meetings, networked with professionals, have mentors, and my whole thing is helping people win in and out of real estate, whether it's their first time homeowner purchase, military personnel, or if you're trying to do something with the equity in your home, or if you got some cash and you're trying to make it more, just have it turn into something more so you can live life how you want to your terms and values and goals and live a fulfilling life. All right. So if you're here, you're interested in learning how to invest in real estate, and we're going to go over the various ways. Now, I have to tell you, just like any other investment, there are risks involved, and it's up to you as the investor to make sure you do your due diligence, make sure you know exactly that you're talking about, and minimize those risks. So if in the event a risk happens, or something negative happens, you knew exactly what you were getting into and you're responsible and you were accepting those risks before you went into it. All right. Nobody likes being put in a position where they're like, man, this was such a bad decision, I'm never going to do it again. All right. That's not what this is about. Now, I'm just going to let you know, this is not an in-depth breakdown of all things real estate investing, because as we go into this, there are going to be so many onions and so many I said onions, I meant layers. There's a lot of layers to this onion, and you're going to see that. So right here is where we're just peeling it back a little bit. We're going to maybe expose you to some things that you didn't know about and hopefully answer some of your questions, and of course it's going to create more questions, and that's the whole point of this. All right, there's a saying where the more you learn, the less you know. All right, so my name is Robert LaFrance. You can find me on Instagram at LaFrance Life. My thing is to help people find their passion, get healthy through health and wellness, advertising, incentives, liabilities, and legal support. So essentially everything I realize that is imperative to a business structure and model, no matter what it is, each one of those pillars are a multi-million or billion-dollar business within themselves. So I've taken the resources and implemented it into one massive business model, and I'm open to sharing all that with you. All right, so let's get it started. All right, what is investing? Anything where you put something in for a greater return to get more than you invested, or to maximize a return on investment. That's called ROI, return on investment. And we can talk about stocks or retirement accounts, or but one thing I want to shine light on is education and relationships. We put energy and work into our relationships and friends, and or our careers and stuff like that. And by putting that effort in, we expect something in return. We want a better job, a better pay, or more time off, or whatever that is. We do things in hopes for receiving something back for us to live the way that we want. So when it comes to investing, we're talking about investing money or capital. You'll hear that as you dive down more into this, is where you put money or energy into something so you can become better off in the end result. And that's stocks, and we're going to go into a little bit about each. All right, stocks, so everybody's familiar with the stock market. How the stock market works is that you buy shares, you put money in for a business, and that business uses that money to operate and to hopefully grow, creating more value for your stocks or your shares in order for you to purchase more, right? And that's how businesses use stocks. About them, they're volatile, they come up and down, they're less predictable. You can predict them, but you don't have much control, all right? You got to do your homework, you got to stay on the times and see what's going on with them. And then you have loss. People lose money in the stock market all the time, partly from not doing their homework, partly from bad investments, or just the fact that the market has a crash. Okay, education and relationships. We want to improve skills, and we want to have prosperous relationships. Doctors have to go to years of school and education and lectures in order for them to become doctors. Bank certificates of deposits, those are CDs. That is where the FDIC guarantees them up to $200,000 if for some reason there was a loss in the bank and they didn't use it. All right, and they have low interest rates. All right, you could see something from like 2 to 3% interest rate on some of these. You can just check your local newspaper to see what the common interest rate is. Retirement accounts, those are long-term. There's different kinds, retirement account professional specialists will tell you that there's, the rabbit kinds that are fast producing ones at higher yields, or there's the turtle ones that are the longer game and slower. So it's up to you to be familiar how your retirement accounts are structured and what funds you're investing in for those returns, okay? And there's also options where it's called a self-directed option. There's self-directed IRAs, but I also just found out that 401ks have a self-directed option as well. And what that means is that you get to assign or direct where your investment money capital goes into. And that's crucial, I think. I think that's one of the biggest advantages of being an investor, is that you have control in what you're investing in and you have control of what your outcome is, all right? But what we're going to be talking about is real estate, all right? So let's go and jump into this next one. So there's so many strategies, and with these strategies and options, we have to figure out which one is the best fit for you, all right? So the first thing to do, whether we're talking about real estate or not, is you have to identify your goals. What is your why? Why are you doing anything that you're doing these days, all right? And what we're going to be looking into is, how do you see yourself working? Okay, I want to invest in real estate. Everybody's seen TV. Everybody knows that you can flip homes and stuff like that. What is it that you want to do? How do you see yourself working? Are you working? Do you have a full-time job? Which strategy meets your goals? Do you want to be on the more active side, or do you want to be more on the passive side, right? And what risks am I willing to take? There's pros and cons of each strategy, property, and the return on the investment. You have to identify what's important to you and what risks you're willing to take, and do your due diligence and everything. Do your homework, do some searches, and just become more informed. Like I said, research and find a mentor. Getting educated and reducing the liability by working with an experienced pro helps significantly. Like I said, that reduces the liability. When you check with a few professionals and say, hey, does this look right to you? Or you check with your attorney, you're taking that pressure off of your own shoulders and having a professional say yay or nay, go for it, all right? Due diligence. Take control of your outcome by doing your homework and buy right. And that's another disclaimer. Just like any investment, there are risks, and it's up to you to be familiar with those. So the common types of real estate investing: you can buy a single family home. That's for savings. Over a period of time, you paying your mortgage, that equity, the value of your home and your loan balance, that difference is called equity, and that's cash in your pocket. Okay, you don't get that when you're renting a house. You're paying the owner of the property's mortgage down, and you're creating more cash in their pocket to pull from that equity. Manufactured homes, they are low startup. You can get used ones for relatively low cost. Speaking, a couple grand, you can find them anywhere from like $4,500 to $7,000. You can pay them off real quickly, and then it starts to cash flow. And then some people buy one lot after another and after another. Next thing you know, they have what's called a cash cow, and they own a manufactured home lot, like a lot, a lot of lots. So, and then there's rental properties. You can have multiple properties of some kind. You're going to have equity in each of those properties, and plus the rental income per property. There's multifamilies. I like multifamilies because it's a lot of doors in one place. It's not 50 single family doors of various places requiring different kind of maintenance. It's all right there. So with there, you also get equity and then multiple rent checks, all right? So what some people do is they live, let's say if you have a 4-unit multifamily or a quad, you live in one of them, you rent out the 3, those 3 renters are paying you rent or paying off your mortgage for you, and your cash, you're making cash like a business. And then there's the commercial, where there's businesses, the brick and mortar businesses. You collect rent checks and you get reduced maintenance because the tenants, the lessees who rent the commercial space from you, most times it's at a cost to them. So if you have a commercial space and you control it and you say, hey, it's $9 a square foot for this amount of square feet for the year, they say, okay, that's what they're paying. And then they come in, they got to turn it into a dentistry or a restaurant or a gym or whatever it is that they want to do. And it's all out of their pocket, which is really nice for you as the commercial property owner, because single families, they require maintenance and all that stuff. Or if you want to update the kitchen, that comes out of your pocket. You can be adding value, and you can get that return by adding the value and increasing that equity in the property. But the commercial, it's just reduced maintenance. And private mortgage lending, that's truly passive and hands-off. People say, oh, real estate investing, it's passive, you don't have to worry about it. You have to do repairs, you have to call the tenants, you have to lease the property, you have to do repairs, and there's things that come with owning a real estate. When you're the private mortgage lender, you're the bank, all right? The banks that lend the mortgages to people who buy houses, they don't do anything but collect checks and interest and make sure that you pay on time. So that is a truly passive, hands-off way. There's ways to purchase properties. There's tax liens. That's where the local municipality aren't receiving their property taxes, so they put a lien on the property. So you get that lien. You pay the taxes for the municipality to use and continue their regular work, and then in return they pay you a higher interest rate for doing that. There's auctions. You can go to the auction house and purchase properties at a discount at auctions. Traditional purchase, whether it's a VA home loan or traditional financing, just like I said, buying a single family home or whatever property for you to move your family in. And before anybody says anything about VA, talk to a VA specialist. All right, VA home loans are the best home loans out there. They're backed by the VA. They're used by regular banks. In addition to, they're assumable. All right, so that means that, you know, whether or not you're a veteran, if you buy a property that had a loan that was a VA loan, you pay a fee and then you can assume their loan and then just pay the difference of the loan value and the value of the property. You know, so if you're selling a house for 200 grand and the VA loan has 190, you can assume that 190 and pay 10 grand out of pocket, you know, to purchase it. You can control properties. There's various types of contracts and options out there to control a property where it's almost like you're an owner without the liability of being an owner, if you will, or the financing of being an owner. And then there's long-term leases where you, like I said, you have those ownership rights, but there's agreement between you and the owner where, you know, you are responsible for all maintenance and repairs of the property, and then you rent it out for a profit. And then private mortgage lending is not a purchase. You're the bank. Okay, so you've acquired a property, now what? You got to work towards your exit strategy. Just like everything else we do in life, we got to have an exit strategy. What are we going to do if someone comes in the room and I need to make a quick getaway? What am I going to do when I'm done working this 9 to 5 after 40 years? What am I going to do when I retire from the military? What am I going to do if this relationship goes bad? You got to do the same thing here. What are my exit strategies and how can I come out on top after this investment? And you got to think about all those. So we're going to go into moving into your regular house and house hacking, whether that's leasing your storage or renting out some rooms or HBB. I don't know. I don't know what that's about, but just get creative and see where you can find extra income coming in just from owning a property. You can lease your property. You have tenants and rent cash flow. They maintain the property. And if you add value, like I said before, that's instant equity in the property, and you can sell for a profit. So if you were to buy the idea is to buy a property at a deep discount. So there's already equity in the property. So I buy a house at $246 cash, but I know that the house is already valued at $300. I have that difference of $66,000 ready to pull from or in my pocket, accessible as soon as I buy it. So that the idea is to get creative here. Private mortgage lending, all right, because we already kind of went over all that stuff. This is a passive hands-off investing. You're essentially the bank, and how this works is professional real estate investors will use friends, family, and associates investment funds to buy, rehab, lease, and sell real estate for a profit. And by doing so, by you letting them do so or letting them use your investment funds, they'll pay a higher interest rate. So just like the businesses, you invest in the stock market, the bank CDs, your retirement accounts, all those other ways, it's the same way. Those businesses are using your money to grow and operate their business and paying you more for doing so. So this way, you have you have a direct impact on the local community, all right? Because if there's a distressed seller going through, you know, tax difficulties, death, or divorce, or something where they're behind on payments and they need to get out from their house, you can go to your buddy who's a real estate investor, help him get that distressed seller out of the property before they ruin their credit or whatever the case. They buy the house, help the distressor, add value to the property, make the neighborhood look nicer, increase the value of the neighborhood, supply and create jobs for that local community because you need contractors, handymen, electricians, all that stuff to create and add value to the property. And by doing so, you're having a direct effect on the local community. It gives you more control of your outcome. You're working with Joe Schmo, your neighbor, your best buddy, who's a real estate investor. You can kind of negotiate and help him grow his business, and you can get more consistent returns. Because if you work with me, a real estate investor, and I promise you 8% return on your money, and I'm doing this over and over and over and over and over again, that's more consistent than having to monitor the stock market for the trades and what people are doing and buying here and selling here and all that kind of stuff. People are successful at doing that, but if we're thinking about the pros and cons of our investment strategies and the risks we're willing to take, to me, it makes more sense to invest in a local company who's going to be more consistent with their outcomes and can establish a relationship where you have direct control of the outcome, both of your pocket and the local community. You know what I mean? So that just makes sense to me. You know, people, I just want to make sure that's clear, you know, because investing in real estate, it is not passive. You know, you gotta do your homework, you gotta buy a property, you gotta research the property, you gotta negotiate, and then once you put tenants or you own the property, then there's maintenance, or there's collecting the checks. If you have bad tenants, you gotta kick them out. You know what I mean? So how much, when we go back to before, what are my goals and what are my exit strategies, what am I comfortable doing, that's where these things you got to think about it. Okay, I have a couple hours a week. I know I want to, you know, drive for dollars. I want to drive around and see what kind of houses out there I can get. Go for it. If you say, listen, I work 80 hours a week, I'm already kind of successful, I'm just looking for my money to do work for me, or if I have $100 and I'm trying to turn that into $1 million, you know, what are my options? And I think that having an industry on lending established already forever, you know, because that's how banks operate, you know, through the use of private mortgage lending and working with a professional is going to yield very highly satisfactory results. Okay. So real estate investors, you can pick a niche or be versatile in your abilities. For me, like I said, I'm a licensed real estate agent. I'm also an investor. So how I see it is, when I go to a client's table and they say, hey, I need to sell a house, I'm like, okay, why do you need to sell a house? You just bought this last year. Why did you buy the house? Oh, well, you know, an investment, this or that, but now I'm in the military, I'm relocating, I can't afford the payments, I'm going through the divorce or whatever. I can make sure that I represent your best interests by having an arsenal of education and tools in my toolbox to help you with your needs and goals. So if you're behind on payments and you're going to go into pre-foreclosure and stuff like that, there's things that could work out better for you than to just, you know, maybe list your property and take the hit and ruin your credit. So there's a lot of options out there. And if you're a person who wants to add tools for the toolbox, you might find yourself more versatile and create more opportunity for yourself when it arises. Or you can be a person who is an active investor and narrows down and does one niche. You know, people do wholesaling, or people just want to do one thing and stick to it, and that's totally cool too. So if you're going to be a real estate investor, you can either be an active investor who goes to homes to help distress sellers. You know, your education on different ways to help them can open up opportunity for you, or you can niche down and focus on one strategy. It's just whatever works best for you, and just to remember to always buy right and always work with professionals. All right. So if you've watched this video, I really appreciate it. You know, if you do any type of investing now, how do you invest and why did you choose that method? Share with us below, because we're all trying to help each other grow and learn. And in this particular case, we're on the topic of how can we make our money more money for us? You know, we want to be making money while we sleep. So please share below so we can all grow together and help one another. Comment and share your experiences below. If you want a more detailed breakdown of certain areas or something like that, comment and I can make it happen. I can make another video, or I can organize a Zoom webinar for all of us and we can do some live. You know, I can do another like in-depth course or workshop, and then we can do some Q&A, and then I'll answer the best of my abilities as well. All right. Thank you so much for your time. Like I said, my name is Robert LaFrance. You can find me on the LaFrance Paradigm. That's my podcast. I'm really focused on helping people win in and out of real estate. All right, and that's helping people identify their passions. You know, utilizing health and wellness, advertising, incentives, and liabilities, along with legal support. All right. So they say a rising tide lifts all boats, and courage is contagious. So help me help you, help your friends. Thank you. Take care.